the financialized world is crumbling, having us, I often say Bitcoin is a risk off investment. It's not a risk on, it's a risk off.
Think about the macro environment right now. Bitcoin is down 70%. I think that you have lived through maybe 4 or 5 different drawdowns of 80+%. What is similar to past market drawdowns, and what is different about this one compared to those past market drawdowns?
I think in the past there was a definite lack of liquidity going on. So, Mt. Gox was the only exchange around, and it was incredibly buggy and wasn't suitable for making markets. And so when it started to blow up, you had a pretty predictable fall in the price. Other exchanges that were dominant, like BitMEX and others, were run without much thought to concern about hewing to regulatory guidelines, let's say. I think when Saylor first started buying Bitcoin, he made the comment that maybe 50 million a day in volume was actual Bitcoin. The rest was wash trading. Bitcoin has had a wash trading problem for years. Exchanges trading their own accounts to create stimulated volume. You see that in the NASDAQ market all the time. NASDAQ is a network of dealers, right? It's not like the New York Stock Exchange where you have a specialist at this post making a market. You have a network, and NASDAQ is for years guilty of wash trading amongst themselves to create the painting the tape and all these other techniques to create the illusion of volume and to manufacture prices. And Bitcoin had this problem for years. And so when the sentiment changed, you would have an 80% drawdown because there's just no volume. There was no volume. Now, what's different here is that over the past, let's call it the Michael Saylor era of the past several years, the volume has become legitimate and the demand is legitimate. And so the markets are legitimate. But the issue here would be the layering on top of this market of these derivatives or DeFi and cross collateralization. So that's created an obstacle for good price discovery. So that would be the difference. But the net effect is the same. People always, of course, ask me and ask you and ask others for price predictions, and it's an incredibly volatile asset. So it really is incredibly difficult to make a price direction other than prediction, other than to say that what I've been saying for 11 years. I'll tell you the direction of Bitcoin. It's up. If you hold it for 3 or maybe 3.5 years, anyone who's held it for 3.5 years or 4 years is in the black, right? So if you've got a time frame of, which is not a long time frame, 3.5, 4 years, you're going to be in the black. But I think that would be the main difference. Is that also, in this environment, when I was at the Bitcoin Miami 22, the conference, the difference between that conference and let's say conference from 10 years ago was the quality of the suits. Right. So the people on stage are wearing, $3,000 suits. Back 11 years ago, 10 years ago, people would show up in torn T-shirts and they were coders and, rarely came out of their basement. But it's the same kind of struggle to come to terms with this emerging asset class. And in a lot of ways, it's the same. You just have a higher grade of speculator. You have, of course, the amount of money that's been flooding the system has increased every year for many years now. I mean, we got to the central banks have decided within the last 6 months to raise rates and really put an end to a 40-year bull market in the bond market. So on the macro side, this is the first time Bitcoin has faced a rising interest rate environment, which causes on the macro side a huge shift in the funds. You see, for example, something like the Russian ruble is the strongest performing currency in the world in 2022 because it's commodity based. I think starting in February with the Russia-Ukraine conflict, we saw the end of a 40-year bull market in bonds and financialization and the beginning of a secular inflationary move in global markets that'll be tied to commodities. Commodities were not a big factor for 40 years. It was financialization, interest rates, extend and pretend, just create more bonds, lower, the coupon rate, extend the maturity. That's the way the world worked for 40 years. And now we're in a new world where suddenly the price of stuff like energy and food, it cannot be hidden anymore. It's actually hitting people's bottom line. And that's not going to change anytime soon. That's a secular shift in the inflation, in the economy, in the globe that's going to be with us for years, not a few months. And so that's something that is new for Bitcoin. And ultimately, it's going to do well in that environment because as people begin to understand that the financialized world is crumbling, having us, I often say Bitcoin is a risk off investment. It's not a risk on, it's a risk off. This is where you put your safe haven cash. It's hard to make that case with the volatility the way it is, but when you have something for all the other reasons, it's unconfiscatable, uncensorable, immutable, It makes sense. It makes a lot of sense for 1 billion or 2 billion people out there that have been unbanked. That's where the growth's going to come. That's where the adoption's happening. So those are the changes. Some differences, some similarities.
When you think of the macro environment, the Fed says they're going to continue to raise interest rates. They're going to conduct quantitative tightening. They're going to get a soft landing. Inflation will come down. Everyone calm down, and all will be good in the world. How crazy are they, and how off are they in their thought process that they can actually get inflation down and not push us into a recession?
It's as I said, I think this is a kind of a follow-up to what we were just saying there. So the Fed is still thinking like the world is similar to the way it's been for 40 years. Starting with Greenspan, you had the so-called Greenspan put. Every time markets came down, Greenspan would flood the market with more cash or lower interest rates. And that went through Bernanke, Janet Yellen, Jay Powell. The activist Fed, the model has been with us for 40 years. And that there's no problem that can't be solved by money printing. What happened in February 24th with Russia-Ukraine now is that model is dead. And the price determining factor for prices is shifted from the New York Fed, or from the Fed, to the East, to Russia. Russia, China, Iran, India, Central America, South America, Brazil. Those countries are going to be determining prices going forward. And so the Fed can only operate if the world is on a globalized US dollar standard. But that's no longer the case. On February 26th, 2 days after Russia-Ukraine conflict, the Fed seized like 600 billion, I think, or billion in Russian reserves. So, China looked at that and said, "You mean our reserves aren't safe?" So that was a huge, self-own. That was one of the stupidest things that anyone could have done. So now we're in a new world. And I just think Jay Powell and these guys and Janet Yellen, they haven't adjusted yet.